Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we have a great show for you this morning. So I want you to take hold and take notes, and we'll be chatting real soon, and welcome to the show.
Yeah, good morning, Southwest Florida. Good morning, Alfie. You know, Alfie and his team are dedicated to helping investors just like you navigate the ever-complexities of the ever-evolving investment landscape. Today is no exception as we enter the heat of the presidential election. You know, the stock market is on a roller coaster ride, but it's not just the market that can throw us a curveball. Today, Alfie's going to reveal a topic that can make or break your retirement dreams. And really, if economic uncertainties have put your financial decisions on hold, Alfie has put together a toolkit which is complimentary that will help transform your worries of retirement into confidence. You know, inside Alfie's toolkit, you're going to receive a wide range of materials such as will your money last as long as you do? Are you paying too much taxes in retirement? The Social Security Decisions Guide, and will this current light recession rob your retirement? To get Alfie's free toolkit, simply text the word KIT. Listen, if you don't text, call the operator and ask for his toolkit. Call 239-747-1077. You can get Alfie's toolkit by texting the word KIT, K-I-T, to 239-747-1077. Don't hesitate. Don't wait to the end of the broadcast. Get your smart device. Do it right now. Text the word KIT, 239-747-1077, so that you can navigate the fog of investing. And Alfie, the markets are pretty much up and down as always, and a lot of economic news there, job numbers that really hasn't shook the market. I was surprised it really didn't, aren't you?
Yeah, we did have a little bit of, you're right, John. Job numbers came in, and they were adjusted. You know, now they're always adjusting job numbers, so they'll come out with the job numbers for 1 month, and then they're revised up or down. But when you have a revisement like this, and you know, for the whole year,
70,000 a month.
70,000 a month was adjusted, and which is big. 800,000 new jobs that was supposedly created was not created, was taken off as not created jobs. So about 1,000 jobs for government did increase, but the private sector, 800,000. So that's something that is most likely going to help the feds make that decision on, you know, getting that rate cut in September. So we're most likely looking at a rate cut in September. You know, when you have job numbers that were, I call it fudge. You know, you don't just
fuzzy math is
fuzzy math like President Bush always talked about. W. Bush, he said. He talked about fuzzy math, and that's exactly what it is. It's fuzzy math where you can, I don't know how you can make a mistake that bad without knowing it.
Yeah.
And you do have election year, and now are you surprised, John, that it came out before the election?
That I'm very surprised that they brought it out, especially during the DNC convention.
Yeah.
They dropped that bomb, and nobody there addressed it. The media really isn't addressing it, and pretty much all is rosy in Chicago.
Yeah. Rosy, except if you're out there protesting, that's something else. You do have. Let's talk a little bit about this DNC. You know, it's really a sharp contrast of the Republicans. The Republicans were talking policies. They were talking. They had really the men and women that would speak about what they're feeling. You know, with the economy, with their paychecks, with their emotions, and with this high cost of inflation. And really, inflation has not been really talked about over there. This past week, you didn't have the crime wasn't talked about, but who was talked about was President Trump.
Yeah,
and
I saw on X over 200 times they mentioned his name, economy 8 times, and inflation 4 times. So what does that tell you? Yeah,
it tells me that they have nothing to run on. Okay, so even though the polls are showing that Kamala has a lead, and it's just hard for me to believe that someone just about a month ago had a rating of approval rating in the 30s, is now, close to 50 in that short time. And what has she done to get that rating up that high? Really nothing. She hasn't really shown any policies that she's going to be running on. So this is something I hope people wake up, because this is a big election, and people do have concerns. And if you look at like Lawrence Jones from Fox, he went to the barbershops, and I don't know if you've seen that, John, but many of you might have. He talked to the
people on the street,
on the streets, in the barbershops, getting cuts, and there you would think that, hey, this is right in Chicago. They're gonna probably vote for Kamala. And these were Democrats that saying, what have they done for us? They haven't done anything. It's lip service. And I think that's what's going to happen. A lot of people are feeling lip service from the Democrats, and they're not getting substance. So that whole DNC was nothing about substance and what they're going to do. It's just bashing. So I hope people, see that and say, this is, the money from Wall Street went from Kamala having it, winning, to now this is after during the DNC, to Trump winning.
Right.
So this is the betting odds. The betting odds had a big swing. So we'll see what happens. But how does this all affect your portfolio? It does. Now, what we're doing with our clients, some people are looking for some protection during this time. Do you want to have some protection where it protects the first 20% down? So we can move your portfolios into things that have a 20% buffer, meaning it takes the first 20% hit for you. There's different ones, a 10%, 20%, the first 5 year responsible for, and then they'll do the next 25%. And then what happens is you're limited on the up of the S&P anywhere between 12 to 15, 17%. So if you think, well, the market's not going to really go up more than 12 to 17%, but it protects it down. There are things we can do here. So if you do have some concerns about volatility, remember the markets do not like volatility, and we are hearing some concerns. The market has had a nice run, and so now's the time to maybe make some adjustments. So if you're thinking about that, if your advisor isn't talking to you about some strategies, give us a call. John's going to give you the number, but give us a call and get what we call the retirement simulator process, and let us put you through the process and show you what we can do here to protect your hard-earned money from a down market, and also have opportunity for upturn. And then we know what happens after the election. Then what we can do is put you in a portfolio that can make unlimited upside potential. So these are things that we can change in a heartbeat. So it's just a matter of giving us a call and letting us do a complete dive into what's going on inside your portfolio.
Yeah, if you're listening to Alfie and I today, history suggests the market is entering the most volatile period of the 2024 election between now and the end of the year. If you have not had a review, you want to sit down with Alfie, get a second pair of eyes, even if you've had an advisor for many years. Alfie has 40 years experience as a certified financial planner professional, and he's a fiduciary, which means his responsibility is to you, not to any of the products or services that he offers here through the Advantage Retirement Group. And he has created what's called a retirement simulator process that will take your portfolio back 5 years. We're going to track it back 5 years because past performance is there already, and his past performance of his portfolio will sit side by side with yours, and you'll be able to see just how his would have performed compared to yours. He's going to take a deep dive into your current portfolio and see if there's any hidden fees that need to be exposed that are eating up your returns. He's going to make sure that you're diversified correctly, that you're allocated properly, that you're not taking undue risk for the amount of return that you've been getting over those past 5 years. And best of yet, he has 5 availabilities this week, and you need to take advantage of it right now. Don't wait till the end of the broadcast. Pick up your smart device, pick up your phone, call the operator, or text the word VISIT, V-I-S-I-T, to 239-747-1077. Alfie is Southwest Florida's premier certified financial planner professional, and he's going to get you to and through retirement. He's going to put a plan and a strategy together and an income plan that will make sure that your goals and dreams and visions are in line with what your portfolio already has. Pick up the phone, text the word VISIT, 239-747-1077. Visit with him in Fort Myers or Naples. He has 2 beautiful offices. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. You know, Alfie's book was in high demand last week, and due to popular demand, Alfie is offering it again to you. A complimentary copy of his book awaits you. To claim your free book, all you have to do is call the operator and ask for it. Tell him I want a copy of Alfie's book that he's offering on this broadcast, or text the word book, B-O-O-K, to 239-747-1077. That'll take you to a landing page. You'll be able to check out and get his book complimentary. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save over the years. That's why he named this broadcast Saving the Investor, because he wants to save you from the pitfalls, the schemes, the traps of Wall Street. Simply call the operator or text the word book right now to 239-747-1077. 1077. You know, and Alfie, well, we're talking about the convention. We're talking about the election. We're about to start early voting in about 30 days. So this is getting really real right now.
Yep.
And as you said, the Democratic platform really isn't there. Even when you go to her website, there is no policy there, which is absolutely amazing. And we know from her past speeches that she is close to a radical communist that you can get.
It is. And that's not really out yet. But if you look at her voting, so if you don't have anything to look at right now, because there's nothing out there, you have to look at what she's done in the past. And what she has done in the past, excuse me, you're looking at a very radical voting.
No fracking.
Eliminate fracking 100%.
Tax on unrealized gains, 45%.
And people don't really understand what tax on unrealized gain is. Now, this is something that would be so detrimental to the stock market, because here, and it could be more than just stock market. It could be your house, not your house. It could be a business. It could be, but let's just look at stocks right now. So if you bought a stock, like look at NVIDIA, we have clients that put in $100,000 in NVIDIA, and they have a value of $1 million right now. So that's $900,000 in gains. Okay, and what they're proposing is unrealized gains to be taxed. So, number one, when would it be taxed? Usually, those taxes are not, they're deferred until you're ready to cash them out and say, okay, I want to cash this out or part of it out and move it. Well, then you're taxed. But what she's proposing, taxes on unrealized gains. So if it's sitting there, it might be where, if you had this stock for over a year, if you had it over 5 years, we don't know what the policy is because they don't talk about it. But let's say it's 5 years. So you have this $900,000 in gain, but you haven't sold it yet. They're saying, John, it's time for you to sell that stock or not sell that stock, but pay your 40%, not the 20% that's right now. It's at 15, 20% capital gains. They're talking about 40%. Pay that 40% on that $900,000.
Well, what if you pay it and then you lose half of it the next week?
Well, that's what I'm saying. So now you got to pay this money. So most likely for you to pay that money, you would have to sell that stock to pay Uncle Sam the $300,000 plus.
Crazy.
Okay, but that's bad. But then, like you said, what if that stock went down? Okay, what if that stock went down the next, in that year? Well, you just paid capital gains on something that went, that was up, and now it's down. So you lost taxes on that. It would be devastating. It would be devastating. And the other thing that would be devastating is stepped up basis. That's the next thing. That's what they really want to do. Stepped up basis is where if your kids inherit a portfolio of yours and you had $1 million, $2 million worth of gains, they don't have to pay taxes. They get the new cost base on that. That's a wonderful thing, and that's a wealth creation that the government has let us have for many, many years. If they take that wealth creation away, that would be devastating also to the stock market. That'd be devastating for the country, because a lot of people would be inheriting stuff that would have to pay unbelievable amount of taxes on something that wasn't taxed. So People really need to do their research on who they're voting for. But all this affects your portfolio. So this is why we always talk about Roth conversions. If they're going to do all this, what they're not going to do is, right now, we don't hear anything about messing with the Roth. So the Roth is something that's tax-free. So the more tax-free money you have and the more taxes that they increase, the more rates that they're trying to increase on across the board on taxes, the Roth conversion might be your best choice. And the markets are the taxes are still down right now, so we can talk to you about that. We have programs that we can run to see if it's worth to do a Roth conversion now before all hell breaks loose. Because if she is the one that beats Trump, you're talking about a different country. You're talking about a different stock market. You're talking about a lot of different things. So you need to have some protection in place for your portfolio. We're never here trying to scare you. What we do is we always talk about being proactive instead of reactive. And when you're reactive, what you're doing is you're fixing your mistakes because you did not look ahead. So we want to look ahead and say, okay, this is what we can do now because we know what is going on. Before I turn it over to John, the good news is it's not all, you hear about polls and, we can't. Can you trust a poll? I don't know. Can you trust polls that have 1,000 people or 500 people that they're saying 500 people, this is how and then they're tilted either Democratic or they're not usually 50-50.
Hillary winning hands down.
Yes. But this poll with X, which is Twitter, if you think about it, it was 5.8 million. 5.8 million. So this is what I would say is one of the biggest polls I've ever seen. And one thing about Twitter, you have actors on there, you have politicians on there, you have everybody on Twitter, which is X now. And if you have everybody on there, you're going to have Democrats on there, you're going to have Republicans, you're going to have independents.
Free speech platform left, really.
Yes. And out of the 5.8, they did a poll. And the recent poll, and this Elon Musk recent poll on this just ended, and it was 5.8 million that participated in this, and it was 73% in favor of President Trump and 27% in favor of Kamala Harris. So if this is any indication, it's going to be a good time for Trump to take this lead across all polls, not just this one. So there are great things. You just have to stay positive. It's hard to stay positive when there's so much negative going on, but you can't let your emotion get in the way when it comes to investing. You have to have someone that is keeping up with the politics, keeping up with what's out there, and staying ahead to get you to and through retirement.
Yeah, very important. That's why you want a certified financial planner professional on your side, Alfie Townsend, with over 40 years experience. There is a ticking time bomb no matter how you cut it, and that time bomb is taxes. We're taxed on our income, we're taxed on our property, we're taxed every time we buy something, and we know the government can't handle taxes well because we're $35 trillion in debt, so they don't know how to handle money at all. And this ticking time bomb is going to affect you either now or later. It's definitely going to be something that you need to be concerned with, and you need a plan, and a plan that addresses the uncertainties and instills confidence in your future, your financial future. As a certified financial planner professional, Alfie has put together a tax map that will strive to help you achieve 3 key goals, very important, especially in this election year. Number 1, you need to find ways to lower your tax bracket. He's going to show you how to do that. Number 2, protect your money when taxes rise. He has ways of sheltering you so that taxes will not affect your current income plan and strategy. And number 3, he has ways to create a tax-free income. Yes, I said it. He has plans and strategies to create a tax-free income. You need to be one of the first callers right now. It's absolutely free. All you have to do is either call the operator or text the word TAX, T-A-X, to 239-747-1077. This is a ticking time bomb that's going to affect you. It's going to affect you now because when you take your required minimum distributions out, you're in a tax bracket or into the next tax bracket. Alfie has ways to protect your income and create a tax-free income, lower your tax bracket, protect your money when taxes rise. Call the operator or text the word tax 239-747-1077. The time to minimize future taxes and generate a tax-free income is now. Call the operator, ask for his tax map, or text the word tax to 239-747-1077. You know, Alfie, it is true. We're taxed on everything. You know, our property, everything we buy, our income, Social Security. I mean, we have so many taxes that we're paying, and they want more. And yet the more taxes we pay, the more in debt our country becomes.
You got to remember how much taxes the Europeans pay. Okay, Germany, their taxes are in the 70%. So we're not anywhere near where they are, but they want us over there. We can't. I mean, this is important. But, you know, I was just thinking while you were talking, John, have you ever seen those birds that just put their heads in the ground?
Yeah.
Yeah. And this is what a lot of people do. They put their heads in the ground, and they don't want to hear what's going on around. They want to, like, don't talk to me, put their hands over their ears. You got to be the people that say, get your head out of the ground and say, let me do something about what's going on, and let me put a plan together to protect my money that I worked for, that it won't go down. And this is something you need to do now instead of when it's too late. So give us a call. We're looking forward to talking to you. Good morning, Southwest Florida. Another beautiful day here, and we are in studio. This is Saving the Investor Radio. I'm Alfie Townsend, Southwest Florida certified financial planner professional, and it's my mission here to really give you solid information so you could take it home and just dissect it and know that you're going to be just fine getting to and through retirement. I'm here with Pastor John Antonucci, and we have a lot of, questions last week from our radio show, our TV show. We get these questions all the time, and we want to share some with you because this is what it's all about, is what's on people's minds. So we're going to go through that.
Yeah, we're going to talk about being aware of stereotypical investor mistakes, and you're going to learn how to recognize common investor blunders and how to avoid them, because Alfie brings 40 years of a wealth of experience as a certified financial planner professional, and he's a strategist. He's always ahead of the curve, and he's always innovating, income strategies that will help get you to and through retirement. One of those strategies that he's put together is a toolkit that helps transform your worries of retirement into confidence. And inside Alfie's toolkit, it gives you a wide range of materials, such as, will your money last as long as you do? If you can't answer that question, you might be going back to work, and you don't want to do that in your retirement years. Are you paying too much taxes in retirement? The Social Security Decisions Guide. Will a recession rob your retirement? To get a hold of Alfie's toolkit, simply text the word KIT. And again, if you don't text, call the operator and ask for his toolkit. Text the word KIT to 239-747-1077. Text that word KIT to 239-747-1077. Get a hold of Alfie's toolkit today. It really will give you a wide range of information that will give you some common sense, practical approaches to your investing strategy, whether you're retired or soon to be retired. Many investors find themselves reacting to market news rather than sticking to a plan. We know news is always out there. Propaganda is always pushing us in a direction that they want us to go. Alfie, how important is it to have a solid investment strategy in place? And even in retirement, a lot of people think, well, I'm just going to harvest this money and take out 4% a year or 5% a year, and that's it. But really, you have to have a solid investment strategy in place, even in your retirement years, wouldn't you say?
John, I would come back to talk about income. Income is probably one of the hardest things to talk about with a financial planner, because where do you take that money? That's the first question. When I see a new person and they come into the office, and David, your son David's awesome advisor here at the Advanced Retirement Group, and we have a strong team, with Curtis, with Garrett, but we want to find out what their goals are, and we want to find out what their expenses are. You could have a lot of money, John, but if your expenses are through the roof and we have to start taking out 8 or 9% of what you have to pay for your income, that's not going to do it.
Right.
It's just not going to do it. So what we want to do is look at what your expenses are, and then after your expenses, I always say to have a successful retirement, you want to have your expenses down where a lot of things are paid off. you're not having to worry about large payments. So as long as you have your expenses down and you have this money sitting here, now what we have to do is decide what you need and where we're going to take it from. That's the whole key. That's the ticket. And you want to take it from something that is not going. If the market has a downturn, you don't want to be taking out money each and every month that you're dependent on from accounts that are going down. If they're going down because the market's going down, you're taking money out because you're living off that money. Now you have a problem. You have what you call reverse dollar cost averaging. Now remember, when you're working, you're putting money in each and every biweekly, and your money's building up nice. But when you retire, you have to take money from your accounts, and that's the tricky part. So yeah, we use different tools, different vehicles to give you that systematic payment that you're looking for. Sometimes we even help, just create your own pension plan with something that's totally guaranteed. We can do it that way. Some people are they don't want to take the heavy risk. So what we do is we have some things that are guaranteed, contractually guaranteed, that will give you a monthly income you can never, ever outlive, with inflation protection in there also. So we look at what you have and we put plans together, because we look at everything, not just one or two things. We look at the whole picture, and we know what's out there to create that income.
Yeah, you're listening to Saving the Investor with certified financial planner professional Alfie Townsend. Phone number is 239-747-1077. You can meet with him in Fort Myers or Naples. We're talking about investor mistakes and how you can avoid them. And if you're like me, market volatility can sometimes be unsettling, especially when you see the market drop, 500 points, 1,000 points. We talk about it, and you talk about it all the time, to help people manage their emotions during those times and stick to the plan and the strategy that you put together as far as the income plan that you've carved out for them. And really, it's always a long-term goal, and you don't want to deviate from that long-term goal. What advice do you have for our listeners, investors that are out there, how they can manage their emotion during, unsettling times that we face?
John, the best way to manage people's emotion is to have our clients understand what's going on. And if they understand what's going on, meaning they understand what's going on inside their portfolio, knowing that they have some protection there, knowing that their risk, we're not giving them more than they can handle. So if their risk number, and that's one of the most important things, is find out what their risk number actually is. We do some extensive questioning on, okay, this is how much you have, and how much are, if the market goes down, when would that pain point be? And they would give us a number. Then we asked them questions. It was a team of psychologists that put this together for them. And as we dig down deep, it comes out with a number, and that number lets us know really what they're comfortable with in a down market. And this is something that if we know that number, we can build a portfolio that's acceptable to their risk tolerance, knowing that if the market does go down 20%, theirs might go down 10%.
Right.
Okay. So as long as they know that they have some safety nets and that they're not taking excess risk, then typically our clients feel pretty good. We'll have days where the market has some, we had them not too long ago where the markets had some pretty big pullbacks. And I said, I called the office, I was out one of the days. I said, how many calls did we get today? And they said, no one called.
Right.
And that means that they understand the market, because that's what we do here. We try to really educate them to the point is this is the market. If you didn't want any type of volatility, John, we have those products.
Right.
If you don't want any volatility, we have those products that will get you that 4 or 5%, But if you're saying I want that 8 or 9, 10%, you're going to have to take a little risk to get to that. So that's where we educate and we show you the ups and downs, what you're giving up to get that, and what you're taking more of a risk to get a higher return.
Yeah. And I always see, people in your office, clients in your office all the time, and there's probably people that are listening to us that haven't had a review in years, or people that are do-it-yourselfers. Regularly reviewing your portfolio with a financial advisor is crucial. How often do you recommend this, and what should investors be looking for in their advisor?
Well, I would say what investors need to be looking for is a comprehensive written income plan, meaning where is that money going to be coming from? Did I take a true risk assessment? And do I have a plan in place? You have to have a plan in place. So, but how many times we do a review? You have to do one once a year with our clients because things change. And when we do that, when we do annual review, what we do is and a lot of times what happens, we do what we call a Friday financial wrap up, where I'll do a video. David or Mary will do a video, talk about the market in review. But there's always a calendar to set up either a phone call, to set up a time, to set up an appointment, a Zoom meeting, if they feel like they need to talk to us about, before their review. They can do that. So we're very proactive with that, where if they need a review, we're gonna give them a review, before their annual review. But during that review, what we want to do is make sure their risk is still the same. And we do tweak our portfolios. We have some portfolio managers that manage for, universities. They manage the monies for states, different states. These are managers that you wouldn't have access to if you didn't, if you were trying to do it yourself. So a lot of people do it yourself. What I propose to you is give us an opportunity to show you what we do compared to what you do, and see if we can put you in a better position where you're retired. You can go do what you want to do. You worked for many, many years. Now you're retired. You don't want to really be messing with this. If we can show you, we can put you in a better position, then that makes it better for you. Most importantly, it makes it better for your spouse if something happens to you first.
Yeah. Alfie has 40 years experience as a certified financial planner professional. He's got two beautiful offices, one right here on Daniels in Fort Myers, and then he has one down in the Naples area for those of you down there in that Naples-Marco Island area. And he has put together what's called a retirement simulator process that will help get you to and through retirement. Takes a deep dive into your current portfolio to see what's really going on. It's going to expose all the hidden fees that could be eating up your returns that you don't see in your prospectus each time you get it. Going to make sure that you're rebalancing properly, that you're not taking undue risk for the amount of return that you're getting. Make sure you're diversified correctly, allocated properly. And his 40 years experience as a certified financial planner will be a second opinion or a review that you definitely need. You want to get in his office. He can only handle 5 this week. So if you want to be a part of that, call the operator or text the word VISIT, V-I-S-I-T, to 239-747-1077. You owe it to yourself to visit with Alfie in Fort Myers or Naples. Text the word VISIT or call the operator right now, 239-747-1077. He's going to add value to your life and add value to your portfolio that will get you to and through retirement. Stay tuned. We're going to be right back after this break. Don't go away. Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Alfie's book was in high demand last week, and due to popular demand, Alfie is offering his book again. A complimentary copy of his book awaits you. To claim your book, all you have to do is call the operator or text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save over the years. That's why he named this broadcast Saving the Investor, because he wants to save you, the investor, from the pitfalls, the schemes, the traps of Wall Street. To get your free book, simply call the operator and ask for it, or text the word book right now to 239-747-1077. We're talking about investor mistakes today. And Alfie, for somebody that's in a 50-50 mix, bonds and equities, because the market does very well and has been doing well over the past year, rebalancing is a key strategy for maintaining their desired asset allocation. And a lot of people don't do that. How often should investors rebalance, and what factors should they consider, when it comes to rebalancing a portfolio?
Well, rebalancing, John, is important, because if you don't rebalance, what happens is your portfolio gets out of whack. So let's say we have a nice little run on the market, and you're all of a sudden you were in a 50-50 portfolio, 50% equity, 50% bonds, and now all of a sudden you're in a 70-30 portfolio because you didn't rebalance. That means your equity has a lot more percentage than your bonds. So without rebalancing, I mean, it's good when the market's going up. You're saying, "Oh man, I'm glad
money, right?"
Yeah, you're making money, but now you have a hit on the market, and all of a sudden, when you should have been down only, let's say, 5%, you're down 10% because you're more an aggressive portfolio. It moved from a moderate to an aggressive, or moderately aggressive. So what we do with rebalancing, you should do it every quarter. Our portfolio managers rebalance every quarter, and that means they're selling the things that are up. They'll sell some of the gains on there and buy the things that went down, so that you're buying it at a discount and you're selling things up and you're buying things that went down. So that's called rebalancing, and rebalancing keeps you in that mix that you're wanting. That's for your risk. Remember, if you don't rebalance, and if you're a lot of times doing it yourself, you're not rebalancing, then that means you're going to probably be more in either a aggressive portfolio because the market's done good, or it could be more of a bond portfolio because your stocks are doing bad. So it's nice to keep it the way that you want it because it's based on your risk.
Yeah, and if you haven't been rebalancing, you could be in trouble down the line, and that's why you want to give Alfie a call at 239-747-1077. Let him check your portfolio and make sure that you're in the right framework of equities and also bonds or whatever your safe investments are. A word that a lot of people may not have heard on the radio broadcast is tax loss harvesting, and you always say that can be a powerful tool. Can you explain how it works and why is it important for investors to be aware of it?
So we have a great program with tax loss harvesting, John, where we literally have people that will look at a portfolio. Let's say we'll mirror the S&P 500 with about 70 stocks. Okay, and this is done through professionals and their programs. What they're doing is they're taking opportunities on stocks that are going down. So a stock that goes down, let's say out of those 70 stocks, let's say, for example, Exxon goes down, okay? And so if you could sell Exxon at a loss, but you want to stay invested, so what they would do is you can't buy it back for 30 days, what they can buy is Chevron to keep you invested. So they buy Chevron because Exxon's down, most likely Chevron's down, and they're selling Exxon, taking a loss there, putting it aside for you to use down the road. So that's tax loss harvesting. A lot of people, John, do tax loss harvesting at the end of the year, so they're thinking they're doing tax loss harvesting, but what they do it throughout the month. They could do it, throughout the week. What they're doing, they're looking for opportunities of companies that are going down in the portfolio, selling it, putting it over there for that loss to be, carried over. Think about back when Trump was president, and remember how gas went way down. I mean, it went down like $18 a barrel, and that's when he filled up all the strategic reserves.
Right.
But as that $80 stock, let's say, went down to $18, if you didn't do anything and just didn't do anything, it went down to 18, then it came back to 80, right? So 80 down to 18 and going back up to 80. So you feel good because you're back to where you were. But what if you took advantage of those downturns and sold it when it was at 60, sold it when it was at 40, when it was at 30, when it was at 18, and then start buying it back at the same price with a different company?
It sounds like you're saying you can offset the gains with the tax loss at the same time by doing that.
That's right. So what you're doing is you got all those losses from 80 down to 18. So now it's back to 80, right? So let's say, for argument's sake, it goes to 100, and you wanted to sell at 100, you'd have a 20-point spread there, right, of gains that you could offset with all those tax loss harvestings that you did throughout the years. So we can tax loss harvest on accounts that we can get $100,000 to $200,000 a year of losses and keep you invested, okay? And then down the road, when we're rebalancing a portfolio or when we're taking monies out, you're able to offset gains. Anytime you can offset gains, if you had sold a stock that had a $100,000 gain and you have this money sitting over here that you can say, I'll take 100 of that 300 and pay no tax on that 100. That's a beautiful thing. That's what the wealthy people do, and that's what we want to do for our clients. Even if you're not, I always say invest like a billionaire, even though you're not a billionaire. Okay? Invest like you have more than you have, because that will get you where you want to be.
Yeah, that's the advantage of working with a certified financial planner professional with over 40 years experience. Alfie has access to products and services that you can't get on your own and your typical advisor can't get, because he's going to bring you institutional pricing. Risk tolerance is something that we talk about all the time. It changes in people's lives, and you have a way of assessing risk tolerance and adjusting it accordingly, not by saying, what's your tolerance, from 0 to 10. You have a program, don't you?
Yeah, we have that program, John, and we emphasize that program to really find out what your true risk number is, because if you have a true risk number, that means that you're going to be just fine when the markets are going down, because you're not taking unnecessary risk, and we don't have you in something that would be aggressive portfolio, because you might be in a moderate portfolio. So as long as we know your risk number, you're going to be situated and be able to handle the ups and downs of the market. That's the whole thing. If you're in the right portfolio, you have the right risk number, you are going to really behave a whole lot better when that market starts to misbehave, because that's where people make the mistakes, is when they're wanting to get out of the market because they feel like they're in too much risk for the risk that they're acceptable of taking. So it is very important, John, to have that risk number.
Yeah, it's been a great show today. Remember, folks, that tax planning, income planning isn't just about saving money. It's about creating a strategic roadmap for your financial future. To learn more about how you can optimize your income plan and tax strategies and secure your financial goals, visit with Alfie in Fort Myers or Naples. You can text the word VISIT, VISIT, or call the operator at 239-747-1077. Alfie's team is ready to help take you to the next step towards financial success. Don't wait. Reach out to them today and start planning your future. Call the operator or text the word VISIT to 239-747-1077.
John, I love having shows like this where we're literally talking about what people want to know about. These are questions from listeners, viewers from our TV show that, they want to know about a Roth conversion. Should they be doing that? Rebalancing, everything that we talked about. What's tax loss harvesting? So these are things that we really get into with all of our clients. We have to really dig deep to give them the right portfolio, the right plan to get them to and through retirement. If you never watched our TV show, it's called Saving the Investor. It's on NBC2 right after Meet the Press. So if you haven't seen that, that's a great show. Again, 11 to 11:30 every Sunday. And then, of course, right here on 92.5, well over 10 years. I think I should start saying about 12 years, because it's been probably 12 or 13 years we've been on 92.5. And we should name the show Saving the Investor for a reason. We want to save the investors from making mistakes that we know about, so you don't have to do them. So I hope you get a lot out of this show. Until next week, be blessed.